We're always on the lookout for great investments, and that always means we keep our eyes and ears open to what's happening in the market.
We rely on a host of research materials and experts to guide us, to help us look in the future, if you like. And one of the most important contacts in this area is John Edwards from Residex.
Residex is a massive storehouse of property data containing the value of just about every house in Australia.
A short while ago, I interviewed John Edwards and asked him where would he be buying in 2010.
Working out what's going to happen as we go forward is always tough. It is a crystal ball, but I think that we can be sure of a couple of things. The first thing that we can be sure of is that the Reserve Bank is going to increase interest rates. Now, I don't think that they're going to do it significantly. I think probably over the next 12 months, 75 basis points will see us out at the maximum, and we're likely to see an increase somewhere in February, probably, of about 0.25. Now, that's the bad news. The good news is that in fact there is going to be a continuing demand for housing, and the reason is that the skilled immigration intake remains high and looks like it's going to continue to remain high. Now, there's a key with that skilled immigration, and that is that we know that there's a very high correlation between house price growth and the volume of skilled immigration. It's about 98%. So if you've got high levels of skilled immigration, you're going to have good house price growth. We've got high levels of skilled immigration. But they're the two key factors: immigration and interest rate movements.
Where do you see the opportunities in Australia at the moment in the property market?
Well, there's another issue in the market currently, and that other issue is affordability, and that relates to the interest rates. As the Reserve Bank puts up interest rates, we're going to see the affordability of housing drop back from where it is. Now, it's affordable currently because of the low interest rates. That affordability is the key to where we ought to actually invest. What we've got to make sure of is that we invest in those areas in our capital cities where they are affordable. That means something under 500,000 or a little bit above, probably closer to the 350, 450,000, then we're going to see good growth.
What challenges are we going to have?
The challenge for us and for our investors is try to identify the right properties to actually invest in. Now, you've done something clever in the last 12 months, 18 months, and that was that you built one-bedroom units solely for the purpose of rent in a location where they would be desired by the young people. That's the key to making sure that we as investors make good returns. The days of actually being able to buy a house and being sure that it was going to do really well, they have passed a little bit. You don't buy that house and land now unless you are certain you can do something with it to actually gain an upfront or a good profit when you've done something with it.
Like renovation, adding value?
Absolutely. So my own view is that in the majority of cases now, we are actually going to make more money out of investing in apartments that are slightly run down, renovating them and putting them back on the rental market, because rent returns are going to rise, and they're going to rise significantly because of affordability. Affordability is going to drive the ordinary Australia in the unaffordable cities like Sydney, where there is high levels of demand, out of the housing market as owners, but into the housing market as renters. And those people are going to want to be there to get quality apartments that are affordable, and that's the key.
Capital growth in the future looks like it's going to be fairly minimal to moderate. What can we do about it?
Growth is going to be moderate. We're not going to see the same levels as we saw in the past. But remember, and you should know, you're the expert. It's the renovator's dream. So we want properties that we can renovate and we can improve dramatically to lift our immediate profits and capital so that we can borrow against that and get back into the market as soon as we can to get the next one.
What states do you feel will have the best growth in the future?
It's not feel.
Oh, that's right. It's the numbers.
Absolutely. It's the research. It's the models. It's actually what the economy is really telling us in all of the numbers. In any case, where I think is probably best, based on all of that, is Melbourne, because the economy in Melbourne is absolutely moving forward strongly. Number two, Sydney, because we have a massive stock supply issue in Sydney. However, it's unaffordable. But the units in Sydney are more affordable than the houses by a country mile. Then I got a funny place for third.
Where's that?
Hobart.
Hobart. You've always had a little thing about Hobart.
Yeah, I have. And I have. The reason I have is that Brisbane, I had a thing about, and you had a thing about, and still have a thing about Brisbane, yeah. But we liked that because it was so affordable and it was where retirement people could go and they could cash up and get some dollars.
Yeah.
The only place that they can do that potentially now and where it's really quaint or attractive living is probably somewhere like Tasmania.
Yeah.
Then I'd come back to Brisbane, because Brisbane clearly has still got a lot of growth. That southern corridor has got a lot of growth to go on. It can't continue in its economic demise that it's currently in for too much longer, can it?
No.
And it's going to get better. And when I look at the numbers, Brisbane is actually past the floor. It's past the bottom. It's on the rise.
So it's on the rise?
It's on the rise.
Good.
Perhaps the one that I would say no to most currently still is Perth, because I still think that...
Really? With the massive mineral investment in there?
Yes, because I still think that it's out of kilter in terms of value. Darwin continues to move strongly forward. Worth a look if you're after rentals. Still the highest yielding rental place in Australia. Adelaide is a long shot. It's really dependent upon the uranium.
Yeah.
And I think that
That's
depends...
the Olympic Dam,
Yes,
BHP.
yes. If all that goes ahead, it's the next boom city of Australia.
Right.
So we need to watch that carefully. But at the moment, it's not where I would be. It's a risky place to go and put your money currently.
I heard there's another capital that...
Did I forgotten? Canberra.
Yes. They said there's a growth in public servants down there.
Well,
is that right?
Usually under a Labor government, values in Canberra rise.
Yeah.
And they have done very well. And as I look at the numbers, however, I would say that in fact its relative pricing to other capital cities has been attained. And so in the medium term, I think that it's probably an all right investment, but not where I would be rushing to put my dollars.
Right. Sounds like to me, the right renovation, in the right property, in the right suburb, and you can make it happen.
Absolutely.
John really knows his material, and an interview like that is the reason he's one of the experts involved in our training program.
Yes, his company Residex offers property investors a vital tool which helps reduce risk and make money. But there are plenty of other tools we've developed during our many years as successful property investors and renovators. We tell people what these tools are and how to use them in our online training called Renovation Success.
The material beneath this video explains it all. And if viewers are watching this on YouTube, they should go to www.renovationsuccess.com.au.